Hello, reader. Right, on to idea number 8. So, we are going to talk about the capital. So, yeah, hustle harder, hustle smarter. Um, yeah, I mean, 50 cents has no connection with EMV Capital. It was just kind of seemed like a funny joke to just talk about 50 cents and 50 pence, and um, that was the offer price for a fundraise that EMV Capital were doing when I wrote this idea. So uh, yeah, they raised 1.5, oversubscribed. 20% of it was raised by the by the founders, and yeah, they gave us a few snippets of updates. That a funding round for Wanda Health had happened, and Wanda Health was it's an interesting one. It was all assets under management, and then it fell ran out of cash. So there was no hit to EMV, but EMV basically said, right, well, we'll pick up the assets and we'll pick up the and we'll help uh, um, restructure this, and as part of restructuring it, got a stake in Wanda Health. So went from being indirectly asset managing it to directly part owning it, and because it went through then a funding round, the piece that it owned, that it got for free, um, well, got for free for spending some time on it, um, then led to a really nice up round. So this idea has some um, assets under management. So some of these are directly managed. So these are directly held, directly owned holdings. So the directly held portfolio is 41.7 million, and then assets under management which are not owned by EMV, but they're assets that are being managed by EMV as part of venture capital trusts, EIS, that kind of thing. So this trades at a vast discount to its share price, and that 69% is even after that 1.5 million fundraise. So I guess if we look at, it's at 13.16 today, so 13.16 on 41.7. I mean, I think it's slightly above 69% today. Actually, but yeah, look, I'd say um, part of the reason for this idea was for the types of holdings it holds. So it has a number of holdings in clean tech and a number of holdings in health tech. So both of those areas are quite topical. Both of those areas are just themes that I was looking to run with in 2025. In 2024, I had IP Group that holds quite a number of ideas in these same two areas, and IP Group um, is has had a tricky year, but it's interesting. It's interesting. So having sort of fallen to kind of some low depths for no real good reason. It's now sort of there has been a bit of life in the beast, and it's had some interesting news flow. I mean, when you've got um, news flow from these guys, um, news flow from these guys, news flow from this, and that. I wrote. I mean, sorry, I don't want to get off topic too much, but the reason I'm showing you this and where it connects back in is that in the same way that this was languishing at 35, 40p, and then it's received 119 million cash for something that is what 400 and well it was 400 million. It's now increased back to 520 million. But even so, I mean the amount of successful realizations that IP Group have achieved in 2024 for it to be on 53p is ridiculous. It's NAV similar to EMV. Its NAV is by my estimate about £1.07, something like that. So it's yeah, I think there has been some real harsh discounts to this sector. But anyway, the reason I talk about this is that this similarly was like, oh, it's nothing's ever going to change, and then it does change. And hopefully what I'm going to show you today is that the reason for picking this idea, and I don't know these things to be true, it's just my reading of the situation, is that there's a lot of money that's gone into clean tech. And our new Labour government is putting a lot of money into clean tech. So um, you know investments in this area should be and are getting easier to realize, easier to market, because more and more are this fundraising is getting less difficult now. If you've got peers and other holdings that are similar to the one that you've got, that makes it far easier to market, because you can say, well, so and so that also do ventilation systems and heat pumps, they floated and they valued their business at this. So my business that's similar to theirs, same size, blah 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 blah, should also, there's a read across, isn't there? So I suppose that was the first part of this article, was just to set the scene around um, clean tech, particularly, and health tech as well. A lot of the health um, tech majors, the likes of Bristol Myers and Glaxo, uh, have all got limited pipelines of patents that are expiring, so are looking to replenish what 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 they're doing. And of course AI is making an impact into this space as well. And I think the other thing I draw out is that I really like the emphasis into Cambridge with this idea. Now, some of this is quite new into EMV Capital, in that they took on the Martlet portfolio in 2024. So, will we see movement in 2025 as a result? I mean, I'd like to think so. I think there's a good chance. We'll look a little bit at Martlet. Now, I didn't really spend a lot of time of it in this article itself, although I did say, um, go and look at my Martlet articles. I'll see, I've got them all up on screen here, so I'll spend a little bit of time on these today. We can also see other read acrosses from the likes of Molten Ventures, for example. That Molten Ventures is now pretty steadily at about £4, but spent most of 2024 at sort of £2, £2.10, £2.20, and kind of recovered, again based on just some realizations. So once the thaw began, um, no pun on the last article, but anyway, once the thaw had begun on sort of one or two realizations, it became easier, or the market became more convinced on the remainder. So I suppose what I've done here is I've looked at the value of assets under management, the capital under advisory over time. So I've looked at the directly owned portfolio here, and I've looked at the capital under advisory here. And as you can see, this jump here is due to Martlet. The fact that they took on the Martlet portfolio in 2024. We can also see here some movements across the portfolio, so we can see generally some increases um, to fair value so we're seeing sort of movements up for the most part. So, and this is based upon funding rounds. This has been based on, so not so much on realizations. The realizations haven't happened yet, but hopefully what I'm going to show you is that we're not too far away from those, and or at least I don't feel that we could see some realizations in 2025, and that will be transformative for EMV in 2025. Also talk about dilute and anti-dilute, and these are just my own phrases. This isn't sort of something that they themselves say, but it's this idea that rather than going on a game show, and obviously this isn't a game show, but going on a game show where essentially you get some capital, and then you get a dragon investor, and the dragon investor then charges you for their time and effort. That the dragon in this context is EMV Capital, that they will charge their portfolio companies, and so that's a form of income for that there's a fee, a management fee for managing assets. So they'll take a fee, and that fee has been growing, but more than this, that they'll provide advisory services into their portfolio and then charge them, and those charges can be in cash, they can be in equity. So there's kind of a number of ways that they can monetize that effort. And EMV Capital are not unique in doing this, but it's worth understanding that that's what they're doing. So you've also got the scenario where there's some direct holdings that are now being bankrolled by external capital, so the assets under management are covering the costs of growth, which obviously is dilutive for the direct holdings. But you've got to contrast that then with the services that are then being provided that then are anti-dilutive. So that's kind of what I mean by dilute and anti-dilute. These are just my own words. I think also I sort of talked about how I feel, and again, I don't know this to be the true. And in 2024, the numbers, I was looking at an article today, numbers, the amount of money that's going into VCT and EIS schemes dropped in 2024, dropped in 2023. So do I know that they're going to increase in 2025? No, I don't know that. I don't have a crystal ball, but I think with the changes to the taxes in the budget, it feels to be quite likely that that is a form of tax optimization that people will increasingly do. Because your pension is now no longer sacrosanct and can be part of inheritance tax, the logical thing is to look at ways to make other things sacrosanct, and one of those things can be that certainly the EIS is my understanding. Now, I'm not a tax advisor, so that's just my opinion, but that's potentially one of the reasons that they will grow, and probably grow strongly in 2025. There's a lot of tax benefits to those schemes that that make them make sense, I guess you could say. Right, and I've included some links and references there to show that. But yeah, one of the things that I think was interesting is when you look at the last set of accounts that when you look at the last set of accounts, is that it can appear that they're making a great whacking loss, so that they've lost 1.8 million. You think, oh gosh, for a share that's what, 13 million to buy, 1.8 is a lot of money. That's over 10% of the market cap. But these are the directly held companies, Proaxis, Glycotest, and Cetromed. Now, because now it's worth me quickly explaining this. Because the ownership is over 50%, the approach EMV Capital have to make is they have to consolidate all the accounts together. So the losses of a subsidiary company have to be included in the losses of the parent. It's almost like sort of, if your children are below 18, then if they commit criminal offences, if they go and break someone's greenhouse, you've got to pay as the parent. you know you might dock them their pocket money or whatever, but ultimately you're responsible for the broken greenhouse, even though it's your child that's done it. And that's probably the best analogy to talk about here, is that over 1 million of those losses, so about 2/3 of those losses, are actually the subsidiaries and not EMV Capital itself. In fact, these numbers here, um, are actually heading quite in the right direction, in terms of that net, say 600,000 loss in the year to June 2024. My estimate is that the growth in assets under management and the management fees and income that EMV Capital is driving, that it should reach break even in 2025. Whereas these losses here, even though these are losses, as far as the accounts look, that these losses are actually offset by fundraising, and dilution from the fundraising of funds. So actually, they're kind of a paper loss, but not a loss directly to the business, because the losses are being funded by a third party through dilution. So it's a bit complicated, but that's why it's you've got to sort of look at the numbers and look at so if we move to the assets under management. So I did some work to kind of work through the martlet companies, and that was basically going through Companies House and different methods to work out. And this is just the last set of accounts, so it would be a lot of them 2023, maybe a few that were end of 2022. So not up to the minute, net asset values, but whatever they were at the time. And you can see I've sort of listed them out here. So that was the first 20. Then we had the next 15 I covered, and then the final one was these ones here, the final 11. Yeah, the 240 million of 226 of net asset value, and of which about 10% of that, or 24.1 million, is being managed through Martlet. So Martlet sort of own about 10% of these companies. And just to kind of sum up some of the quick examples, businesses like Nobax, where they're working on a technology. I mean, it looks pretty hideous, but that green liquid liquid bandage, not liquid bondage, that's something else entirely. It's basically, if you put this green splodge on the cow, the problem with putting a plaster on a cow or on a farm animal is that the farm animal's gonna rub it off because it's irritating. Whereas something like that, it's sort of a spray or something, so it's easier to apply, and it forms a three-dimensional. So it seemed like, to my mind, I mean, I'm no great expert on veterinary science, but it seemed like a clever technology, clever idea. These guys knew quantum. I must say this looked a very impressive idea. Again, it's working with quantum networking. so quantum computers, and this is a University of Cambridge spin out. I happened to kind of go and look at their website and look at their news flow, so I can see, they've featured in all the great and good are covering them. That the CEO is one of the women 100 women to watch. They're collaborating with CERN in Switzerland with what's something called White Rabbit timing technology for data center scale quantum computing networks. Takeaways from the Optica Quantum, some hottest startups. This guy, ex Cisco CTO, has joined as a board. I mean, look, these are just. I mean, this is one of the sort of 50 or so companies that Martlet are managing assets for. But to my mind, there seems to be some real gems in there. Rovco would be another. I would point out that Rovco, which it appears there's some news flow here where it's merging with Vast, but these guys are doing mapping of the seabed for wind turbines, and again, involved in I think it was a £30 million fundraise. They've hired 150 new employees, or going to be. They've got a combined workforce of that. They're going to be growing it by that. So very, very exciting companies. So some really interesting companies and I cover them in part 1, part 2, part 3. What I also did was I just kind of came up with a little bit of a A, B, or C scoring system for the potential. So you can see here, they're pretty much all loss making. I mean, they're not profitable. They're growth companies that are loss making. But Oxford Space Systems, talking about having a military contract, talking about rapid commercialization. These guys here, a phase 2 clinical trial. This one here, phase two successful. There's a 343 billion ophthalmology market. So this is therapeutics that alter mRNA splicing. Again, that's quite specialist, but a large market, a large addressable market. You'd like to think that there might be something in that. These guys here, there's a Series B announced, Series B fundraising announced. So super fast charging lithium-ion batteries. These guys here, so personalized medicine, so wearable tech. These guys here, so again, just sort of track record of sales. They whilst it wasn't profitable, it did seem to have a very mature online presence. So I just sort of called out some of these that looked good. That's the Rovco that I just showed you on screen there. So different ideas. The world's most accurate RFID, having worked in that sector, having the most accurate RFID is no bad thing, I can tell you. So some interesting ideas, and more than interesting ideas, these are businesses that are potentially scaling rapidly. I mean, when you're recruiting in, the CTO of, or the ex CTO of Cisco, I mean, the even if they don't all succeed, I mean, you only need one or two to really succeed, and those assets under management are suddenly worth a great deal, because obviously you earn performance fees and performance fees of about 15%, 10, 15, 20% performance fees of any gains or uplift. So quite interesting, and that's just the ones that had the what I call the A potential. The ones with B potential were not non-starters, far from it. I mean, that one, for example, was actually profitable, and not many were profitable. But some interesting ideas in those three Martless articles. Anyway, moving. What are we doing time-wise? 25 minutes. We need to speed up. So yeah, I guess I kind of came up with how do I see the future? So I sort of said, well, as at last trading update, we're looking at approximately 50 million of capital under advisory. We've got the portfolios a shade under 40. Bartlett is other capital under advisory worth 24. I've said 0 here for VCT EIS, in the sense that I'm sort of anticipating that there'll be a fundraise round in 2025. Again, I don't know that, other than the CEO has intimated that that's in planning. And I don't know that it's going to be 60 million. Again, I'm just sort of working on the basis that he talks about moving it to 200 million assets under advisory. So it's kind of working towards that. And I've split out PDS Biotechnology, which is a US listed holding. So EMV Capital own about it's about 2.5%, 2.55% of PDS, which again, I've kind of said, well, I can see that increasing or reverting, because it was valued at that price back, only 18 months ago. I could see it going back there, and have set out the reasons why in an article. So if you sort of feel that a 20% increase in capital under advisory, that the portfolio can grow by about 10% is reasonable, that this can grow by about 25%, that they can launch a 60 million fund, and that PDS reverts back to where it was 18 months ago. That's kind of that's what that then looks like. Now, this isn't all net asset value, just to be clear. Capital under advisory, you're earning fees from that capital under advisory. Those aren't assets that are owned. This black line down here is the share price, is the EMV Capital share price. So it's the NSCI is the net asset value part here, but again, you can see that that's where that 70% discount is. Martlett is capital under advisory. This is capital under advisory, and then this is listed. So you can see that PDS, if it reverts back to a say 15 million valuation, that is actually higher than today's market cap of the whole thing. So I guess let's kind of look at some of the ideas. I mean, Ventive. I mean, clearly there's money going into heat pumps and into fuel poverty under Labour. So they have announced some schemes to address that area, and that's in some cases 100% subsidy. In other cases, it's a partial subsidy. So the nice thing about the Ventive technology is that it's about heat recovery, but it's more than that. Actually, it's about heat recovery in the winter. So I'm going to ventilate the house, but all of the unclean air that I'm expiring, I suppose it's kind of like sort of going to sleep in the winter, and you put the blanket over your head, because you breathing out sort of warms the bed faster than if your blankets, but it's this idea that you recover the heat from the expired air leaving the house, and recycle that back, and recover that heat back into the building. So but more than that, in the summertime, to do the opposite, that it effectively turns into an air conditioner where it can allow the hot air to escape the hot house, leaving behind cold air. So it's a sort of a heater and a cooler, both at once, which again, you can kind of imagine there being a certain type of buyer that would, rather than pay for an air conditioning unit, which is expensive, pay for um, heating, which is expensive, that you kind of get both. Now, obviously, the cost of ventive uh, isn't inconsequential either, but when you can achieve sorts of savings of this kind of thing, with a 72% thermal efficiency, or a heat recovery of 94%, obviously the cost savings are very substantial as well. So, I kind of come up with a number here of £500 per household per year based upon 1500 kilowatts, based upon 35p a kilowatt. These are the sorts of savings that, I mean, as I say, people kind of know that a pint of milk's £1.59 or £1.55 if you go to Aldi, but people don't do the same sort of level of mathematics over other things like the cost of electricity and the cost of heating your home and, these sorts of technologies. So I think it's one of these that that they've raised some money, so they're one of the holdings that increased in value. They're partnering for production with Pipedrive, and Net Scientific hold 11%. They bought in at 52. It's now worth 0.9 of a million, so they've sort of made 1,600, return, multiple of invested capital of 16 times. So some really, really nice, if this can spin out into an IPO in 2025, I don't know that it will, but if it can turn profitable, if it can spin out, that that alone, could, like, that 16 times isn't the final achievement for this holding, I feel. Qbot similarly. So Qbot did try and start its own installations business, and I think has realised that it needs to just focus on being a technology partner to existing insulators, insulation engineers. So it's kind of moved from installing to technology only. So again, the idea is that it insulates floors. It will go underneath suspended suspended floors and spray upwards. It's a robot that kind of go through a little trapdoor or something, and it'll go and do its business. Compared to a human being doing that job, it's clearly far more efficient. Insulating floors tends to kind of not happen that much because people see it as a very expensive thing to do, which it kind of is, because humans under floorboards is pretty awkward and therefore time consuming and therefore expensive. So sending in a little robot like Qbot can deliver some really good economics. And whilst whilst the energy efficiency kind of like people focus on walls and windows and roofs, roofs particularly. I mean, everybody's always focused on, like, oh well, we've got to insulate our roofs. Well, once you've done that, if you've got a leaky floor, leaky floor's gonna let a lot of cold in to your house. So there's some really good benefits to Qbot and Qbot's technology, and they're looking to drive it across the US. And the US, this is sort of showing this is the Inflation Reduction Act, that there is some very large subsidies, 80 up to 80%, that kind of makes Qbot hopefully a bit of a no-brainer. So again, hopefully that's an area that we can see some really strong commercialization. Deep tech recycling, again, this is a technology that EMV picked up for a song, picked up for zero. They provided some advisory services and got a 30% share in return. I looked at the insolvency practitioners documentation, and the you know, this was the IPOs. The IPOs for 60 million, and it just, you know, as with other fundraisers in the UK, it just, there wasn't an appetite for it, so it failed. And because it failed, the whole thing failed. You know, it went into insolvency. But I mean, looking at the insolvency documents, the plant and equipment cost price was 10 million. So what we're talking about is 30% of 10 million of equipment plus the value of the patents. And what are the patents? Well, the patents are that if you've got plastics are obviously made from oil, and you know, ultimately are produced from oils, that they've got a patented way to return plastics, and this could be just a mix of plastics. So, as I understand it, you can just sort of send in a mix of plastic materials, and what it will do is it will recover chemical feedstocks. So it doesn't turn it literally back into oil. That would be a bit weird, but it allows you to recover useful chemicals that you can then use to make more plastics or new plastics. So it's kind of a now these guys have done a fundraise, so they've raised some additional funds. They're building a commercial facility. So they've got they've got that underway. They've got a second one, sort of second pilot project. They're in negotiation to work with a contractor on that. They've got some really serious people sitting behind them in terms of directors. So you know, the president of the Institute of Chemical Engineers seems a very credible person to have on your board. Yeah, so again, that's impressive. They've got premises, they've got labs, and you know, this point that I said here about the problem of plastic, that for years and for decades we have sent, you know, when you recycle your plastics or put it in a recycling bag, I mean, where does it go from there? Well, unfortunately, it doesn't really get recycled very much. It tends to get dumped and tends to get so yeah, it plays into solving a problem that is an enormous problem. No two ways about it. And actually, our recycling is pretty good. I mean, we do recycle quite a lot of our plastic, but does it ultimately get recycled, or does it get shipped somewhere and then dumped? I mean, Greenpeace will tell us that it's the latter. So there's also some really exciting health techs. PDS is one of them, where you know, they're able to. So they've done a phase 2 study. They're working towards a phase. They're starting a phase 3 study. Their program and their lead therapy is, it works with Merck's Keytruda drug, which is a cancer drug. So PDS works with Keytruda, and when you combine the two together, and that's what the phase 2 did, was it combined the two together. What's the effect of Merck's Keytruda on its own versus both together, the conjugate as they call it, and the results that came back look very impressive. You know, that people live longer, they survive better, that there was you know, quite substantial improved levels of survival, versus 64, and 36-month progression-free survival, 75% versus 61. So some really good numbers coming out of the trial, and this isn't the only therapy that PDS have got, but obviously they need to kind of get some success. They are on limited cash. The cash, to my estimation, will run out in early 2026. So whether they can get to the end of their phase 3 without a fundraise is up for debate, up for question. But you'd imagine that it felt to me that Merck would or could extend. Keytruda is going to come off patent quite soon. So if they can put something in place that itself is um, patented, for a number of years, that would be a way to extend the sales of Keytruda, because they can combine it with other things that then. So it kind of feels like it could find a home in one of the majors, but that's just my speculation. And obviously, the market and the share price of PDS has really gone down. So clearly the market doesn't agree with that sentiment, but we'll see. Glycotest again. Glycotest is detecting hepatitis. So it's the fatty liver and testing for liver cancer, for fibrosis and cirrhosis of the liver. So again, some just sort of did some sums on this, and in terms of its potential valuation, and what it could be selling, and how much profit it could be making. This is future speculation. I mean, it alone could be worth far more than EMV Capital. So it's another where they're evaluating options, and it's taking time, but could be a massive breakthrough in 2025. Similarly, Wanda Health, it's got the sign-offs of medical device QMS, and it's undergoing FDA approval. It's Wanda Health is a series of health monitors, so it's monitoring for, as you can see here, 4 gadgets: glucose, oxygen, blood pressure, and weight. So it's a series of gadgets that work with an app. There are the gadgets: Gadget 1, Gadget 2, Gadget 3, and obviously those just look like normal devices that you might have at home. The difference is that they all work with an app, and by working with an app, scales as well. By working with an app, there's a load of insights that you can then get. And particularly what's interesting as well is whether another holding, which is Proaxis, whether they, rather than having their test as a throwaway test, if you had a repeatable test and the ability to monitor, because they've been given a grant to do that, is there a synergy between Proaxis and Wanda Health, and could that be, and I sort of speak of this because Proaxis is quoted on the Wanda website as a client, slash partner, that could there be a build out of monitoring for people with COPD, cystic fibrosis, and various different lung diseases. So one of the problems that exists is that people have what's called exacerbations, and if you can catch them during the exacerbation, then you can put them on steroids or there's different medical interventions that can happen. But if you don't do those things, the chances are they die, and as a result, you have. So yeah, they're again, it's the germ of an idea that could actually be worth far more than EMV Capital. Cytovale's another one. This just baffles me really that there's 1 million cases of sepsis, sepsis being, infection of the blood. Um, 1 in 5 die from sepsis worldwide. Who knew that? You would have thought malaria, cancer, heart disease, you know, stuff like that kill people, dirty water, you know, but actually 1 in 5 die from sepsis. I mean, that's just a colossal number. So these guys have got, Cytovale have got a test. So it's FDA cleared test for detecting sepsis. So if somebody checks into accident A&E or to the emergency room, the ER, that you can know within a few minutes, well, 8 minutes, whether they've got sepsis or not. And if you know that, you can treat them. You can the chances of surviving sepsis are vastly greater if you can start treatment sooner than if you wait until things start changing color and swelling, and you know uh, and it allows you to then focus in on curing rather than just sort of waiting and seeing. I mean, the study the study they talk about here is that it would save $1,400 per patient if they could detect sepsis earlier. I mean, that says it all. Across 1 million cases, that's 1.4 billion of savings. Well, what's 1.4 billion of savings a year worth? Would paying 50 million for such a thing be good value? I mean, yes, you're still saving 1.35 billion. So, yeah, I mean, obviously, well, I mean, it was called NSCI back then. It's EMV Capital now. That's the old name for EMV Capital. Yeah, I mean, again, it felt to me like it's a bit of a, with potential for 2025. Proaxis as well. So Proaxis is that detector of lung disease, or lung issues, so exacerbations. So this is a lateral flow test currently, that they've developed, that will detect different lung conditions. And as I say, if you can turn that into an ongoing monitoring tool of some kind, that could be pretty massive. So you can see there that I'm kind of thinking in terms of, there's money going into these things from the government. There's also the EIS and the VCT schemes, which more and more private investors and potentially particularly high net worth people are going to be more interested in investing into. So EMV Capital are one of those that offer that. There's the energy efficiency theme. I mean, that hasn't gone away. There's also the subsidies in the US, in the UK, and elsewhere that would potentially, the plastic problem that's not gone away. That again, that feels like there could be something there. Health tech holdings, where you've seen me go through those. I mean, there's a lot of potential there. So what I do in this chart here is just CUA is capital under advisory. So these are the holdings, this 65.7 million. These are just holdings where EMV Capital are charging management fees. So they're charging a like 2% a year, let's say, fee for managing those funds. These are the direct holdings, so fair value, and you can see I've sort of tracked them over time. Uh, um, these are the direct holding percentages. These are the capital under advisory percentages. Things in green is where things have gone up, and things in red are where they've gone down. So you can see, that's the decline of PDS Biotech, for example. This was when Wanda went bust, so it dropped from that to that, but has since increased because of a funding round. So yeah, just to kind of summarize then, I think there's so many shots on goal for EMV Capital. I don't know which one of those will specifically be the one, um, but I do feel that there, there's a really good chance that this will shoot out the lights in some way in 2025. And as I say, I mean, even just the things that are just sitting quietly under the hood, the Martlet holdings. I mean, these are opportunities for um, you know some really, you only have to kind of get, I don't know, say for example, one of the Mag 7, say, oh, actually, I like the look of Oxford Space, or I like the look of New Quantum, or one of the pharma majors. Like, I like the look of Novax, that they buy that out at a huge premium. And the other upside is that EMV Capital get a 10 to 20% performance fee. So say something that's worth, let's say it's valued at 5 million and it gets taken out at 50, 20% of that 45, let's say, and I'm just making up some numbers to kind of give you an illustration. 20% of that 45 is 9 million. Well, 9 million, if we go back, if we go back to 9 million is 2/3 of the market cap of EMV. It only takes that one story to break. Um, and these guys, as I say, have got dozens and dozens of potential stories that could break. I mean, there's 47 holdings in Martlet. There's then others within the direct portfolio, which is this one here. So you've got another 23 holdings here that and some of them are some of them are on Cosidia. I don't know if I pronounce it like that. I mean, chances of that one being one of them probably pretty much nil. But certainly I could see some of the health tech ones, Proaxis. I could see and there are others that I haven't talked about today, like Sage Tech, for example. I mean, these guys are recovering um, um, anesthetic gases from hospitals, because if anesthetics that are used to put people to sleep, I mean, if you just allow those anesthetic gases to release into the atmosphere, they are kind of like CFCs. They're kind of like 500 times worse than CO2. So if you allow all of those to go into the atmosphere, you've got a big, being dramatic, but it is kind of like an ozone hole type situation. So this one is 30%, 30%, either directly or indirectly owned. So lots and lots of ideas that could prove to be realized in 2025. So that brings me to the end of EMV. Thank you for watching the video. I hope that's been a useful dive into my opinion of these holdings. This isn't advice. It's you make your own investment decisions. But yeah, hopefully, I've been able to convey why I believe it's a good idea, in my opinion, for 2025. Cheerio.